आज के दिन की नेगेटिव शुरुआत होती हुई मार्केट बीरिश बना हुआ है और कल क्रिप्टो मार्केट भी काफ़ी सारा डाउन रहा था। तो आज का जो मार्केट सेंटिमेंट है वो डाउन साइड ही रहेगा। तो थोड़ी देर के लिए मार्केट को सेटल डाउन होने दें, उसके बाद देखते हैं मूव किधर बनेगा, उधर अपन देखते हैं। अभी मार्केट पूरा वॉलेटाइल है। तो शॉर्ट टर्म के लिए यहाँ तक गेन आ सकता है, इससे ज़्यादा नहीं गेन आएगा। अगर इस कैंडल के अंदर वीकनेस आती है तो फिर नीचे की तरफ वीकनेस आएगी 9:20 तक। नौ 18 9:20 तक वीकनेस आएगी, क्योंकि यहाँ पे ATR साफ साफ दिखा रहा है हाई है प्रोबेबिलिटी। करंट वॉलेटिलिटी जो है 18.13 है। तो अभी के लिए ट्रेड अवॉइड करें, 9:20 तक होने दे टाइम फ्रेम। अभी जो आपकी रेंज बन रही है वो इसके और ये बनेगी रेंज, इसके नीचे जाता है तो नीचे और ऊपर जाता है तो ऊपर। मार्केट जाने की संभावना और प्रोबेबिलिटी दोनों बढ़ जाती है। ये लेवल्स रहेंगे। जो पहला टारगेट होगा इसमें होगा 792। इमीडिएट टारगेट तो यही है। यहाँ से यहाँ ये रहेगा अपना पहला टारगेट। और ये इस कैंडल का हाई रहेगा बॉडी का स्टॉप लॉस, और ये टारगेट अचीव होता हुआ फर्स्ट शॉट में ही हो गया ऑलमोस्ट। येलो ये अचीव्ड हो गया। बस इतना ही शॉर्ट होता है 60 से। 1.5 रेशियो था और यहाँ तक होता तो तुम्हारा 2, वैसे यहाँ तक टच करेगा, ये कर दिया, हो गया। सेकंड टारगेट कंप्लीट। इतना ही टाइम लगता है भाई इसमें, बहुत ही फास्ट चलता है। ट्रेंड नोटिस किया आपने, यहाँ से ट्रेंड नेगेटिव चल रहा है, साफ साफ दिखाई दे रहा है। करंट वॉलेटिलिटी आप चेक कर लो, बहुत ही ज़्यादा बियरिश है मार्केट, बहुत ही ज़्यादा। तो और ज़्यादा गिरने के चांसेस हैं इसके मार्केट के। यहाँ से हल्का सा रिवर्सल आएगा एक बार के लिए। निकलते नहीं तो फंस जाते तुम। ये देखो वापस आ गया वहीं तक, बिल्कुल बराबर उसी एंगल तक टच किया। पहला टारगेट वैसे भी शॉर्ट था, डाउन हो गया कंप्लीट। ओके, सो लेट्स गेट वेट फॉर नेक्स्ट मूव। बाई का सिग्नल इसके ऊपर होगा। वेट करो वेट करो वेट करो वेट करो, नेक्स्ट कैंडल का फंसना नहीं है किसी को भी। रुका और निकल पड़ा वापस। तो अब ये टारगेट रहेगा इसका यहाँ तक का। वेट करो, फेक ब्रेकआउट था। यहाँ बनेगी शॉर्ट पोजीशन इससे भी नीचे वाले। नेक्स्ट टारगेट उससे भी छोटा रहेगा। वन रेशियो वन, जीत या हार। कंफर्म 1:1 है। 50% चांसेस ये हैं इसकी प्रोबेबिलिटी के, ज़्यादा चांसेस नहीं है। और ये नेक्स्ट टारगेट अचीव होता हुआ, हो गया भाई, नेक्स्ट टारगेट भी अचीव, 1:1 भी कंप्लीट। सिर्फ पेपर ट्रेड ले रहे हैं भाई अपन तो, इनको भी जो भी करना है वो कर सकता है, अपने हिसाब से करें जो भी करें। सेकंड टारगेट कंप्लीट। शॉर्ट टर्म में भी टारगेट जो है हिटिंग नज़र आएगा। फास्टर स्कैल्पर बनना है तो वहीं प्रैक्टिस करनी पड़ेगी, तुम्हें अच्छी खासी प्रैक्टिस करनी पड़ेगी। और ये लिया अपन ने शॉर्ट पोजीशन यहाँ से इस टारगेट के लिए, इस कैंडल का हाई रहेगा अपना 2:55। या तो यहाँ से पलट जाए या फिर रिस्क रिवॉर्ड के हिसाब से खेलो। इस बार है 4:4, 1:4। We are waiting. चलो ट्रेलिंग कर लेते हैं स्टॉप लॉस और यहाँ तक का कर लेते हैं। तो 3 रेशियोस रिस्क रिवॉर्ड जो था 370। क्वांटिटी 29,000। रिस्क टू रिवॉर्ड रेशियो हाई। मीडियम एटीआर आ गया, मीडियम हो गया, ट्रेंड हो गया है चेंज। ओह माय गॉड। ये है डंपिंग यार्ड, यहाँ पे वर्ड डंप। मार्केट खुला है और ठंडा पड़ा है मार्केट एकदम से। ब्रेक होगा, अगर मार्केट में कोई उछाल नहीं है तो मार्केट गिरेगा ग्रेविटी के हिसाब से। नीचे ही गैप बना हुआ है देखा जाए तो। मार्केट एकदम सहम सा गया है। तो जब भी स्पाइक आए ऊपर की साइड पे तो वहां से शॉर्ट करें। अप साइड मूव, give it shot. It's only for paper trade, and this target is achieved. Third target today is achieved. So we trailing the stop loss. over here. So you trail the stop loss. Low makes low, high makes high. It's a rule of thumb. And this target will be achieved. Our first and last target. So I am out for 1:4 target achieved. इंडिकेटर तगड़ा काम करता है भाई। इसमें लो हो गया है, करंट वॉलेटिलिटी बिल्कुल ही लो आ गई है। नहीं, यहाँ से एक साइड मार्केट एक मूवमेंट लेगा, तो वो मूवमेंट अपर साइड हो या लोअर साइड, सो वेट करो। नेक्स्ट अभी कुछ भी नहीं दिखाई दे रहा है इसमें दिस टाइप का मार्केट राइट ना है। वहाँ से पहला टारगेट था, वहाँ से वहाँ दूसरा, यहाँ से यहाँ तीसरा टारगेट। ऊपर से हमेशा शॉर्ट करें जब मार्केट डाउन ट्रेंड में हो। तो ये देखो, जैसे ऊपर निकल गया वहाँ से शॉर्ट करना था, वापस ऊपर निकला शॉर्ट करना था, वापस ऊपर निकला शॉर्ट करना था। और ये शॉर्टिंग इस हिसाब से चलती रहती है। और लॉन्ग में बाई ऑन डिप्स, बाई ऑन डिप्स, बाई ऑन डिप्स, इसी तरीके से चलेगा। तो ये जो है इस तरीके से यहाँ बिच्छू बना था, अच्छा उसके बाद डाउन ट्रेंड देखो, और जहाँ पे अपना सिग्नल बन रहा है अब ये एक चैनल का रूप ले चुका है। इससे नीचे जाए शॉर्ट करने का वॉल्यूम प्रोफाइल। लो एटीआर है तो रिवर्स मारेगा ये उसका। रिवर्स मारेगा बोला था और ये रिवर्स मारा है। जिधर जाना होगा उसका रिवर्स मारेगा ये समझ लो। लो वॉलेटिलिटी है यहाँ पे, तो वेट करें वॉलेटिलिटी का। तो जब तक वॉलेटिलिटी हाई नहीं हो जिधर भी शायद एक बार के लिए, तब तक आपको रुकना चाहिए ट्रेड के लिए। ज़्यादा कोई मोमेंटम नज़र नहीं आ रहा मार्केट में अभी। गुड मॉर्निंग एवरीवन। यही हाल अपन देख लेते हैं बैंक निफ्टी का। यहाँ से शॉर्ट करना चाहिए। ये लेते हैं एग्जैक्ट पॉइंट अपन यहाँ से यहाँ तक का। नेक्स्ट टारगेट सपोर्ट तो नीचे से बना हुआ है, लेकिन अगर ये इसको ब्रेक करता तो यहाँ नीचे काफ़ी जगह खाली है, तो ये 725 तक का लेवल भी दिखा सकता है ये इसको ब्रेक करते ही। और ये लॉस बुक हुआ तुम्हारा। सपोर्ट आया नीचे से और गॉन, तो टारगेट नॉट अचीव्ड। हिट द stop loss. If we don't make more losses, it's a fixed losses. आठ सौ 15-20 तक जा सकता है। This is our point of interest PO I. So this is the signal generated, so we go too long. One ratio 33. आठ सौ 815 के आसपास का लगभग बोला था आपको, तो 815 के लगभग जाता हुआ नज़र आ रहा है। रिवर्सल आ चुका है, लेकिन देखना पड़ेगा यहाँ पे रिवर्सल है या फिर ऊपर ऑनगोइंग सिचुएशन है। सबसे ज़्यादा हेवी वॉल्यूम ट्रेड हो रहा है यहाँ पे, तो वो 816 और जो है 774, यहाँ इसके आसपास सबसे ज़्यादा हेवी जो है ट्रांजेक्शन्स हुए हैं, वॉल्यूम इंक्रीज एंड डिक्रीज हुआ है। मार्केट कमज़ोर नज़र आता हुआ और वॉलेटिलिटी भी लो होती हुई, इसकी वजह से है कि यहाँ पे रिवर्सल पॉसिबल हो गया है नीचे की तरफ आउट। Go to short right now. It's a confirm. Go to short. Go to short right now. It's a confirm. It's a confirm. Last second, it's happening something. 24,485. Last 8 seconds. 3, 2, and 1. It's 84 to 86. 48 seconds. 40 seconds of this candle will define what will happen. It's happening on the short side because of ATR data. Will be going to a cluster high. $83, 20 seconds left. 10 seconds left. 2 seconds delay on live stream. It's going to downside because of we confirm or analyze. This target will be done. It's going done. Then here to here. It's a signal here. It's going to downside already. So this target is here. 24,770. On the low side. So wait for this minute. It's a target going to downside. Three ratio 51, but 72. Going to downside, but here is the resistance support. Break the support, big reversal possible, otherwise go downside. So watch closely. This minute. Five ratio 1. Wait and watch. This is the safe way. We are a bit ready. So here is the give me a clue. We'll go to a chart. India VIX volatility increased to 2%. So be aware of that. It's a reversal possible. It's a possible reversal. After two candles.
This guy is the best scalper in the world for the first time ever, where he showcases the power of his strategy and breaks it down step by step.
Come on, you wait for this candle, you put the stop loss here, you target either. This is the main reason why a lot of traders lose money. They try to anticipate what the market is doing before the market does it. People call this manipulation. They try to break out and they fail. This is the reason we will get here.
You finally will see a trader break down candle by candle exactly what he thinks is going to happen live during New York session.
We are getting ready for the squeeze. The squeeze will be present here. Look. When I told you I will scale out, it's exactly because when you see this, the next step is aggressive sellers.
You coded the algorithm. This is a top 1% trader showcasing his strategy for free.
To give to the audience a little bit of reference, you can either do 15 minutes, 3 minutes, you can do 1 hour, 5 minutes, or you can do the most aggressive one. That is what I do. The setup that we took before is exactly what I will execute in the World Trading Cup. How I did this performance in the World Trading Cup is building profit for the day, building profit for the day, building profit for the day, and in directional days I risk. For example,
Fabio Valentino. You've never seen anything like it. It will blow you away. Make sure you tune in to this episode of Chart Fanatics. Welcome everyone back to Chart Fanatics, the go-to channel for all of the very best trading strategies and concept breakdowns with the very best traders in the world. Talking of which today, we have a world-class scalper with us, a future scalper at that. He has been in the top 3 in the world rankings of the Robbins Cup, actually achieving in a 12-month period over 500% return, and that is in the futures division as well. You probably already know who it is. If you don't know, you're going to get to know. We're going to go through his exact strategy that he used to be able to achieve those incredible results on the world stage. It is the one and only Fabio Valentino.
Thank you for asking me, Ritz. And today we will go deep dive in the model that I used in the World Trading Champion. I made some videos about it, but I keep the source for this podcast. And before starting to explain how the model works, we need to explain what's the misconception about market structure in the market. So I will just start doing it and explain what 90% of traders do and why 90% of traders lose money. So let's start with
That'll be helpful.
the concept of the market structure. That's what usually a lot of traders do, and you can confirm it. This is what usually it's done, watching a market structure shift or change of character or breakout. There are 100 terms that you can use for it. And what they try to do is they try to go trend following when pattern like this presents, and then they can just wait for the retracement to jump in, just going through, considering we are in a short sentiment here, like using the concept of supply or order block, if you want to be more fancy following the algo, mitigation level, and continue to go down. Now, what I tested in a lot of years of experience is that this pattern usually doesn't work if you don't frame it in the correct concept. And to frame it in the correct concept, you need to start using something that is necessary, that is the profile. So you need to understand exactly where you are in the market and what's the big picture that you are watching. Because if this pattern is presented when the bell curve of the distribution of the day is like this, you are exactly jumping on a trend to go against the lower distribution of the volume. And what this says statistically is that only 30% will go through, the rest will remain in what is called the fair value area. So we will just keep getting stopped out till the market really decide to take off. And this is the reason a lot of traders that try to embark on a journey of using trend following strategies, they understand really soon that the win rate is not what they were expecting, like 70-80%. When they try to target, for example, this level from here, and they say, okay, I will just have 50%, 60% win rate, 1 to 3. This is not real, because you are not reading what the market is saying. You are trying to predict the market. Now, the good point about order flow and about volume analysis in general is that you get the knowledge to understand when to stay away, because if the same pattern is presented in this area, it's a completely different situation. To explain you this, we need to go to AMT. AMT is the real nature of the market. And is the concept of auction market theory. Market is an auction, and it goes from balanced area where all market participants are transactioning efficiently to imbalance. Now, market is not usually in imbalance, it's usually in balance. So that's the reason why traders that start take streak or stop loss, because they try to get the long and they get liquidated by, you can call what you want, you can call spring, you can call liquidation, you can call liquidity seeking, everything you want, even if it's not what happens behind the curtains, but you try to get the last spring before the move up. And you notice that this 1 to 10 becomes a 1 to 2, because you take 4 stock to try to do it. Now, if you do this simple change and you wait for the market to get to a condition of out of balance, your win rate will jump up by at least 20 to 30%. And this is exactly the building point of the model that I use. Why I call it a model and not a strategy? Because the concept of strategy is a group of rules that you need to follow strictly. And how can you follow a group of rules strictly without understanding the narrative if the market is a dynamic entity? It's like trying to cage an animal that is not made to be in a cage. And it changes every day, it adapts. For example, yesterday there was this situation about America bombing Iran. We opened with a gap down really heavy. You cannot expect that the market today will behave as Friday. You will have a different behavior. Now, what is helping you is understanding how you can use the profile to exactly time your entry and your area. So this is the step 1 of the model, and is understanding the location. The location is when you can efficiently trade. When you are out of balance, so your model is okay to be traded, you start to see what all the traders are using. So you start to see the market structure, and you start to validate which area can be used to jump on trade. Okay. So now it comes handy to use supply and demand zones, and it comes handy to understand inefficiency. Now, and it comes handy to understand inefficiency. Now, inefficiency, if you can talk about it, is misconcepted now. Zones and okay. So which area can be used to jump on trade.
Yeah.
Okay. So now it comes handy to use supply and demand zones, and it comes handy to understand inefficiency. Now, inefficiency, if you can talk about it, is misconcepted nowadays because it uses the term fair value gap.
Yeah.
But what happened really behind the curtains in the concept of inefficiency is when one part is more aggressive than the other,
Yeah.
so the market gets really momentum in one direction. And this is, if you think about it, is the best moment to transact because the market is telling you this, and this is not my personal opinion or your personal opinion. What the market is telling us, look, I'm out of balance. I'm searching for a new level of balance that will be down. So it can be here, it can be here, it can be here. But I'm telling you that I will go there. Okay?
Yeah.
At the same time, it's telling you that the sellers are more aggressive than buyers because you are getting this kind of concept. And that's when you go to step 2. Step 2 is the concept of validating the level. Because now you have the direction, you have the condition of the market status, and you have 3 possible take profit that you can frame by watching at the other area. Now it comes handy concept called order flow. That is not a concept, but it's like an alphabet, a new way of reading the market. So 90% of the traders try to understand what is happening inside a candle using multi-time frame analysis.
Yeah.
I think the real inefficiency is the way traders analyze the market. Because it's like trying to get the bullseye blinded. Like maybe one time it will work, 2 times it will work, but you don't have exact data about the location.
Yeah.
So what you can do is that you can use this area that create the breakouts. And let's consider that I make an error here, and we zoom out what is happening exactly inside here. Okay. So if this is the swing point that break this low, traders will just watch for what is called fair value gap or inefficiency. That is when the candle is not transactional efficiently.
Yeah.
What you can do is that you can use from point A to point B using profile to watch exactly when there are low volume node.
Yes.
And I know this because I saw the other interview that you have made, and I really like the model also of Carmine Rosato. I think he's a really good order flow trader, and he's doing something really similar to what am I doing, because low volume node, it's a really good reaction level. So you can use it as a continuation. If we have a low volume node here, the probability that we will go down is really high.
Yeah.
So you start to add the concept of refinement. You have the direction, you have the location, you have the refinement of the location. Now you need the step 3. The step 3, it's a little, you need the step, you have the location, you have the refinement of the location. Now you need the step 3. The step 3, it's a little bit more difficult because it's the part where you really need the experience, and you cannot just automate it and say, okay, when it's happening, because it's really sensitive to market. What I use is analyzing big orders. So when there is in one specific point, let's say here, a lot of aggression. Okay, and in order flow platform, typically you see bubbles.
Yeah.
Okay? If you use any platform, you can see bubbles. When there is direction, location and aggression, your ability to predict is 0, but your ability to read is 100. You are exactly tuning in the market at the correct moment, and you are not predicting what is going to do. You are waiting. So this is really beneficial, because when you see aggression, you don't have a huge stop loss, for example, out of balance. You don't have a huge stop loss above the high, but you can get protected exactly above the big sell aggression.
Yeah.
So your risk to reward rate, it's really big, but at the same time, the probability of your trades is really, really big also, this one. What you are doing, if we can make an example, is just swimming on the direction of the flow.
Yeah.
Because you are being pulled down by the market aggression, and also by all the traders that were long, and when this area breaks will close their position. So you get the catalyst down, you get the location of the aggression of the sell, and you get also the target point that can be based, we will see this on chart directly, on the previous balance area.
Yeah.
Because how the market moves, let's remove this part here, but how the market moves is that it's seeking balance. So if you go out of here, and the previous balance area was this one, where your POC, point of control, the previous point where the majority of the volume was located, it's here, the probability that when you go this pattern and you enter here, let's say, you don't need to break your mind to understand where you can put your target. Maybe I can try 1 to 30, and this is another error. Traders think that the risk to reward is not influencing your rate. The more you seek to go above the 80 AR daily, the more the probability will get lower.
Hey guys, I hope you're enjoying this episode so far, and don't forget, we send every single strategy breakdown from every episode for free on chartfanatics.com. So the link for that is in the description below, so just make sure you click that. You just put your email in, and every single week we will send you an up-to-date PDF strategy breakdown for you to keep, to learn from, to reference for free. And don't forget, we're also launching Chart Fanatics Live, where your favorite traders from Chart Fanatics will be live trading every single day. Additionally, Apex Trader offers any future SOFAX. We through 8 and JR is 100.
When you see aggression and out of balance, the market needs to search for new balance. It's like human being. When we are in a condition of fear, our heart continues to have tachycardia till we don't get back to calm, and we say, okay, now we are stable. Okay, this is exactly what the market is doing. So the step 3 is getting a location for aggression, so that the trigger of the model is aggression, and that target point. The target point also is really objective, and I noticed during this year, and also scalping during the World Cup champion, that we can also get a window during the day where this model works really good. Okay, so the best session to use this model is 100% New York session, specifically for equities, so for Nasdaq and for yes, and is not working properly during the first hour of London session. I try to use this model, and during the London session, you see out of balance, back inside balance, out of balance, back inside balance. This is called by traders fake out, and it's usually when the market is not really clear about direction. So one concept that I use to remove this is that I don't trade before New York session. I only trade before New York session in the World Cup, but with a mean reverting model. So I was doing the opposite, and we can go also to it, because it's extremely profitable, and it's even easier to implement this one, and is the following one. So let's say that in a balanced market, from the statistical perspective, during the London session, usually in indices, you have mean reverting behavior. Okay, so it's less common that you will see a trend. You will see bouncing and going out. So one other model that I am using is the one that takes opportunity of when the market is deep discount based on the volume distribution, and it snaps back in. Now, It's the same concept, it's the opposite. Now, we are seeking for buy. We have a target. Why we are using this target? Because this target is where the maximum volume is transacted.
Yeah.
So there is interest. Like market operators are willing to transact here. What I do in this area is that I don't take the first movement. I wait for the first breakout. You can use price action for this, because I get clear market participants of what they want to do. I don't risk that this is only a retracement and then they collapse.
Exactly. Yeah.
I get a movement that is clear. When I get the first breakout and I'm back inside the balance, this probability is really high. It's really high probability. Now, to increase even more the probability, I wait for the hand of the big market participants. So I wait for big trades.
Yeah.
So the common bubble of buy order that I can just say, okay, I jump in with them. I don't need to be a wizard. I jump in when the best one are jumping in with big volume. And if I'm wrong, I want to be wrong immediately.
Okay. Yeah.
Because all the additional losing that you get when you are an inexperienced trader and say, maybe I put the stop loss larger when the market is going against you, because it will snap back. This is really something that will destroy your bank account and your trading account. What you need to do is be wrong immediately, and when you are right, when you see that you get an additional breakout, immediately stop to break even.
Yeah.
So after this small movement, you are already risk-free on the
So
market.
you're quite aggressive with your risk management.
I'm aggressive with my risk management because I need to put in this small amount of ticks 0.25% of my account or 0.5% on the account.
So you say you could do this or take this concept without order flow, for example, but of course the order flow just allows you to have more confirmation, align more with the larger orders.
It's working also for price action, but it's like something that when you see it, you cannot unsee it. So when you are trading, your mind as an order flow trader says, okay, price action is nice, but let's see what is happening in the level. You want to see it. And then I think it's not convenient nowadays to not use order flow for one simple reason. We are edge seekers as traders. Every 5% more win rate brings us more money at the end of the month. Every 1 hour, 2 hour, 3 hour more at the end of the month is more money for us.
Yeah.
So why not using all the information available? I've been in trading floor, I've seen how they trade, and institutional trader, considering that 90% is algo trading nowadays, but the discretionary trader for alternative markets, they still use order flow. They use order flow because they want to see what they are doing. Maybe they are more long term because they work with huge amount of capital, so they prefer to use polling profile. But for short term, after 10 years of trading, I've never seen something better than order flow. So still nowadays, the model is not getting changed. The only change that I've made is during high compression period that we have seen in 2023 and 24. The months that you are going through summer, like end of March, May, June, you see the market is getting a little bit compressed, and August, like Nasdaq movement are really choppy. So what you can do is just say to create specific condition where you will not transact. So this model, it's okay for London session, it's not okay for New York session, but it's perfect for the summer. So
Gotcha.
I'm giving you a model that it's perfect for the months that we are going in, because this is the behavior. Maybe with Iran and America and Israel, it will not be the summer to do this model.
Could change.
But yes, it's working.
But to your point, in terms of order flow wise, regardless of conditions, that understanding of order flow remains, right? So in terms of the principles that you're using when using order flow and understanding that information and deciphering that information, regardless of the conditions, whether we're compressed or whether we're getting a lot of volatility and movement, the lessons and principles you take from order flow remains universal. So outside of, because with price action and purely price action, the problem is, one, you're guessing. Right? You're trying to guess where stops are, you're trying to guess where the big players are, because you can't see it. But equally, when conditions change, the same concepts aren't universal. Now you have to change and be able to adapt. While with the order flow, You still have to adapt. You still have to change in terms of your risk management, your trade management, but the order flow itself, like those orders are still orders. Those stop losses, those participants are still going to be the same. But just a quick question for yourself: were you always an order flow trader, or is it something you picked up?
No, I was a price action trader, but I'm really open-minded. So if someone comes to me and say, Fabio, you can improve your risk to reward from here to here using option flow, I'm really open to it. Like, I think that a trader needs to be the most open-minded person, because if a new tools, for example, if new data like MBO orders can improve your model, you shouldn't put your ego here and say, no, my model is the best one. If it's improving your profit factor and Sharpe ratio, just use it. And connecting to your point, I went to order flow also because the price action, it's harder to replicate for students. Because let's say that we have 100 people watching this, okay? And we say, okay, use a break of structure in favor of the trend. For someone, a break of structure is this. For someone can be external break of structure. For someone, they take the big swing and is this the break of structure, okay? If I say to you, look, drop for the full day the profile is this one. This is the level where you are out of balance. It cannot be this, it cannot be this, it cannot be this. If I say to you, Ritz, when you go here, just put a filter of 30 contracts on Nasdaq on the 1 minute. You cannot think it's here, because you will see the bull. So it's really objective. Now, there is a skill in reading, of course, market sentiment, market change. But when I explain you something that you can go home, test it, and you will see exactly what I'm seeing. With price action, I think the subjective analysis is really heavy, especially if you start to input multi-time frame. So
Definitely,
from day to H4 to H1 to 15 minutes, 3 minutes, 1 minute, what's the probability that the trade that you frame is the same that the trade that your student will frame? It's really low.
That's what I was going to say. So when it comes to, say, teaching, for example, when there is no order flow, that subjectiveness becomes quite a difficulty, because everyone has a different perception. As you said, there's a really good example of showing that. But then when you have order flow, regardless of the time frame potentially and where you're looking, that the areas of the charts are all going to be the same. Everyone's going to see the same thing, and those numbers are going to be reflected exactly the same across the board to every single person. While even the subjectiveness of, say, just candlesticks, like a large red candle to one person might just be, that's just another candle. While to another person they'll be like, oh my goodness, the market is completely falling off a cliff.
When they explain the model, when you see a big candle, how much it's a big candle, how much ATR you include. So there is a lot of subjectivity. And also, let's consider that we have 3 levels of analysis. We have lagging, we have real time, and we have leading. Lagging are indicators. So if you get MACD, if you get stochastic, if you get RSI, this is created as a derivative of create MACD if you get stochastic. Lagging are indicators. Time, and we are leading. Lagging are indicators. So if you get MACD, if you get stochastic, if you get RSI, this is created as a derivative of price. So you get MACD that is always going after price, never anticipating. Price is real time, so you are watching what is happening as an effect in real time. But with volume, you are watching the narrative before the price created. I give you an example of something that I never explained, okay? And this is something that really helped me to see the developing pressure to be able to put at break-even sooner than other people, okay? So let's say that we are here. We have a long bias, we are out of balance, and we have the previous day point of control, okay? So with price action, when can we put at break-even? When we break this level. You agree with me? Yes, because we have level of protection that we can put here and we say, okay, it will retest and go.
We shouldn't break that low.
With volume, we can use one tool that is called CVD, that is cumulative volume delta. what cumulative volume delta is giving you is a benchmark for pressure of volume. So you are out of balance, so the probability you will find a new point of balance is high. With cumulative volume delta, you see, this is the price, maybe you see the cumulative volume delta doing this. When you are here, the cumulative volume delta is doing this. What does it mean? That aggressive buyers are really pushing on the gas, and there is a lot of interest, because as the price goes up, you don't see sellers aggressive, but you see that buyers are willing to buy at higher price. And if we are at an auction and there is a limited piece of Mustang from 1969, okay, and the base auction is 1 million, and you see buyers starting 1.2, 1.4, 1.6, it means that the price is probably going up because they are interested in the piece. So what you can do when you see that cumulative volume delta is pushing up and you see this leg already building, is that you can already put to break even. Because you know that as the smallest retracement, aggressive buyers will continue to push up and you are protected. This is something that you can do only with leading indicators. You cannot do before. Of course, I didn't talk about global macro, but also global macro, it's a leading indicator, or on-chain analysis for crypto. But for intraday and scalping, like, order flow is the benchmark too.
Let's take a break for a minute there, guys, because I want to tell you about the best CFO yet. So just let's say, even when there are buyers who want to buy, but let's say if the auction price is starting too high, they don't really like where it's starting at, you'll see actually the auction begins. Anyone at $1 million, no one answers, no one says anything. So then the auctioneer or whoever's like running the auction will bring the price down until there's some interest. And then you never know, like it might seem like, oh, no one wants this car, no one wants this vehicle, or in this case, obviously, no one wants to participate or place any orders in this market. But then once it hits the level that people are interested at, let's say if it's that car example again, let's say we start at $1 million, but no one's interested. Bring it down to 800,000. Now suddenly someone's interested, one person's interested. Okay, we bid it up. But now people who were there for that particular vehicle, yes, and then you'll suddenly see how, we started at $1 million and no one was interested, but suddenly we're blasting up to 1.25 million and there's still orders and there's still more bids, and therefore that velocity and that amount of demand.
At the moment, you go to the market price, because the market price is 2.1 million, you start to see at 1.9 million of auction, market participants saying, okay, let's go on increment of 50,000, not 200,000. So the market gets lower and you build new balance. And then the point of control is the seller that closes it. Usually the auction. So this is how really the market works, and this is what I use daily to frame my entry. And then what's good about order flow is that it's really you can adapt it to every market condition. For example, if you have a model with price action that is working really good, you don't need to abandon your model. Just see if you can get better precision and remove the losing trades using this concept. So it's not something that you will not start from scratch. Just expand the level of knowledge you have from candlestick charts.
So like you said earlier, as a trader, and a pure trader at that, and who's someone who's focused on trading 100%, that's your goal, is to how do you build more edge? How do you squeeze more edge out of the same knowledge, playbook or strategy that you're using? Because that's really what you do at that point. You're not jumping, okay, I've got this strategy, but I want to find a better one. That's not how the mindset is, right? And then if you come across a really good playbook and edge and strategy, you always can start to add that. But your focus point is, how do I make this playbook the best it can be? How can I be the best trader possible? And in this case, you might have a profitable price action model, but your goal then is, okay, how do I squeeze more out of it? Right? So in terms of using order flow, if you're not using that already, that would definitely help you to squeeze more out of it. Now, I'm sure there might be some people who try and learn order flow and go, this is a bit more complex for me, and therefore, for that particular individual, it might not be as helpful, for example. But I would say it's probably a slimmer amount of people, right? But the worst thing you can do is just not even try, because you're already writing. It's like people who need to learn fundamentals, right, in macro. They don't, because they go, it's complex, and the price actions are not
much to study.
But in reality, when you look at even just this year, but COVID was a great example of it, for as a lot of traders came into the markets. But even just this year, for example, is a great example. Last year, Yes, we had quite a bull market, but there wasn't really a crazy amount of fundamentals behind, in terms of like changes and volatility changes and market changes. But this year, we're just coming into towards the end of June, and literally we've seen highs, lows. We've seen the markets completely shift month after month, week after week, and it's probably not going to change. And we call this a Trump market. but again, if you don't know macro, it's so easy for you to sit there and go, the market's crazy, I can't understand what's going on, versus the people who do have an understanding. And I won't even class it as like a deep understanding. Some people who just have a basic knowledge allows them to have more clarity and calmness, which as a trader, as we know, is extremely important. One thing we'll do, so from here, where should we go from here? Should we recap the two models quickly? We covered two, right?
To go on one point before that is called edge decay.
Yeah, let's do it.
Before going to recap the model.
Let's do it.
The concept of edge decay is when your model lose edge. Okay, and this is something I notice a lot with price action. So for example, before I was using supply and demand in trend following, and when the volatility change, for example, you are creating one rule that you have moving average long, and we are adding to the trend when you get here. Okay, volatility change, so the length of the swing, if it goes from here to here, you already take a lot of stop loss. Not because you are wrong, the direction is right, but the market will just swing higher. And I think every discretionary trader notices it.
Yeah.
So this is edge decay, and it's your lose of edge in the change of market condition. It's what also Jim Simmons was talking about with his Renaissance fund. And with of the flow, what is interesting is that you cannot actually have an edge decay, because what you are watching is the true nature of the market. So you are not framing the market in something that is close rule from A to B, but you are understanding what's happening. And I will give you an example of something that improved my model by 4 or 5 percent in win rate. That it's a lot if you're a scalper. And it's the following one. Before, if you are like close in the range, you are trading price action and you are trading continuation. With breaker retest model, it's really common. Okay, so you wait for this, then you wait for the wick down, and on the test you go long. If you start to do one simple exercise and you start to only use order flow to zoom out when this is happening, like you take one specific part, so you cannot say that order flow is complex. You take the same candle, just you make an exercise, watch cumulative volume delta here and orders. You can use also footprint for this. If you see that at this level there is a lot of aggression and the cumulative volume delta is doing here, it means that this movement is not supported, and the probability that you will go down is here, and it's something that is telling you before the price brings you to stop, so you can just decide not to jump in. And this is a concept that I want to cover because it's something that I went through when the price action model was not working properly during the 2019, and I had to step up the game, and I was thinking, no, I need to study from zero, and I need to implement something that will cancel and erase all the learning curve that I had with price action. But it's not like this. Just you will start from where you are before, just understanding what's happening behind the market. Of course, it's easier to think that the market is dominated by some black entity behind the table, because understanding the mechanic is difficult, but I can guarantee you that you will improve as a trader. And so we go now on the summary of the two models, and we start with the trend model. So this model is a trend following model, and we will go before on the timing, that is New York session. Okay, so we want the biggest amount of volatility to implement this model in live market condition, and I don't advise to keep the trades for the night. So this is a model that gets closed as soon as the market closes. You don't bring overnight the trades, because you also need more margin for futures. It's not convenient at all. Just if you are in profit or if you are in loss, cut the position, and tomorrow it's another day for this one. So this is the timing. Then when we go on the step one, the first step is understanding market state. we can only have two market states. We can have a balanced market, price action going here, and we can have an imbalanced market. Okay? With this model, we want to transact here. We are not interested in this market condition. So also for the gamblers, you have one rule that keeps you out of the market, and this is really important because when I start scalping with price action, every movement was okay for me. Like every small impulse, and then you say, okay, I took 3 stops for the day, I'm out, and then the big moves arrives. So this is the lock where you cannot enter if you don't have exactly what the market needs to tell you. This is the market state and what we frame as the step 1. Then we need the location. The location is exactly your swing point, that is this one, okay? That you need to analyze deeply because you need to understand if you want to jump in here, if you want to jump in here, or just if you want to jump on the trend sometimes from the lowest point. Because momentum is so high that you can just say, okay, I jump here, but I cover myself here. So it's still a good risk to reward rate. What you use to do this, you use profile. Okay, use profile. And what you search is low volume node. So where the market, let's try to draw the profile, okay? Say that this is the profile for the swing point. What we can see here is that this is the low volume node. Not the best at drawing, but I think it's understandable that
we're going to see on the charts, right?
The point where the lowest volume you get transacted, what you can do here is do this, okay? So what I do usually is I don't put a limit order.
Okay.
I put an alert a little bit below, okay? Because when it arrives there, I want to see big trades, big orders, okay? So as we were saying before, we started from the timing, we went through the market state, we went through the location, we go to the step 3, that is execution or trigger. What you want to see is aggression. If you are seller, you want a big red ball, okay? When you see a big red ball, you can jump in and your stop loss will go here and your target will be the previous balance area. So if we are here, the previous balance area, it's here, let's see, the POC, this is our target. And we are going to take out not half the position and let it run. We are going to take out the full position because the probability is that the market will reverse from it 70% of the time. So it's just not worth to keep the position for only 30% probability more. Better that we take all that we can in this case. Now let's go to the model 2, and the model 2 is mean reverting. So the model 2 is using the market state that is the opposite. So it's using consolidation. Market state is consolidation, and is when the profile is protecting from breaking here and breaking here. Okay, so you get from here to here to here to here. What we are trying to take is the out of balance condition that get back inside balance. And as I told you, we are not trying to take the first swing because it's risky. We are getting the second swing. So when we have the first breakout, we are just waiting for the retracement. It's the same concept as before. Now the location is the swing. You frame the location, you wait for the retracement. So let's consider that this is the swing. Same stuff, low volume node, aggression seller. Consider that we are here maybe. Where we go, we don't go here. This is an error that everyone is doing. The probability is not high. You go here, you go to the
where the
POC,
bulk of the auction is taking place,
where the probability that you will go to balance is really high. And if you are wrong, you want to be wrong immediately. If you have big sell orders here, immediately here it's your stop loss. A small trick for the scalpers, aggressive scalpers. There is a way to avoid slippage, or at least minimize slippage put the stop loss not above the high.
Yeah.
Because above the high there are a lot of orders, and what you see is that market will boom accelerate. Example, when you take previous daily high, previous daily low, previous weekly high, previous daily low, you see that the market, even if it's a failed auction, now is going down, it accelerates. So you lose an additional amount of tick that you can protect. How you can protect them? Just put your stop loss 1 or 2 ticks below the high.
Okay.
So you are taken out before everyone that is
Full acceleration takes place.
and it's worth it. I tested it and it's worth it because sometimes you get 5 ticks, 6 ticks and it's a lot.
Because the overall chances of price getting to 1 or 2 ticks below that high and then not go for
Not great. It's almost zero. No, it's not zero. Sometimes it happens and you just want to cut your ends, but on the long term, like statistically wise, it's worth it.
Yeah. Because in this case, for example, just to recap, so this recap-wise, timing-wise, you're looking at potentially London, right? And then in your consolidation periods, such as normally your summer months, right?
Yes.
Just as an example, but in terms of recapping the thesis, it's the fact that yes, we're in a range, and yes, you could target here because price is showing that yes, we're going from high down to low, but the highest probability is that auction area where the bulk of the orders and transactions are taking place versus, okay, yes, we could get here, but there are chances that we could get to there and rebound back up to that auction area again, or rebound back up to the high. That there's too many variables trying to target here, or especially lower, versus the highest probable, and that it's not guaranteed, nothing's guaranteed, but the chances are way more in your favor, especially considering the information you're taking on board. Because again, you're not just entering from the first spike out of the range. You're going to wait for your confirmation and then look to execute.
Exactly. And then consider that there are some days that they are really blessed days where you have this model.
Yeah.
Then the market breaks the low. You activate the second model for New York, and you take 2 amazing targets, and you are done for the week. So yes, these are the 2 models. Now the tricky part is correctly identifying the consolidation area, because you can make it as simple as possible and say, this is 1 day. So I use the profile of the previous day.
Yeah.
Okay. So it's easy. You don't need to have headache about it. You just wait for the breakout. Okay. There is a more advanced model where you have more execution, where you get the ability to identify the consolidation phase. Okay. You just take an order flow platform and you see the compressed candles, and you just plot the profile on there. This is what we were going to do because it needs a little bit more skill. I will explain. You plot the profile, and I will show you something really interesting that not TradingView but some order flow platform are willing to give you also the delta of the transacted volume before, so you can see for each level who is dominating the market. This is really useful because if you see here that you are going up and is dominated by buyers, it's not the best condition to get to buy trades, because the probability that you will do this, it's really high.
Yeah.
At the same time, if in this area you see a huge delta sell when you break out, it's your birthday.
Yeah.
You just go for it.
So should we go over quickly the pros and cons, and then we'll pull out the charts? Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in the entire trading industry. TradeZeller allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable, and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZeller, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZeller and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZeller, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZeller right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZeller. The links for TradeZeller are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
Yes, so let's go on the pros and cons. The cons is that if you use the second model, compression days are killing you. Because sometimes, especially if you don't work on the daily profile, but you work on the short-term profile that you can trace by yourself, consolidation is killing your win rate. Because maybe you take 5 small stop loss.
Yeah.
5 small stop losses, maybe a loss on $5,000. Then you take profit that is like 15-20,000, but at the same time, psychologically, the win rate gets lower.
Yeah.
And if you see a lot of red in your account, even if at the end of the week you are still profitable, it's heavy for beginners.
It's a heavy, yeah.
So one bad concept is consolidation that directly affect win rate for the model. And this is the reason I created a second model, because when I lose with one, I make profit with the other one.
Gotcha, yeah.
So it's like balancing the equity curve and giving you more execution, but the drawdown gets lower, so it's worth it. This is the first cons. The second one is stress. We need to be honest with it.
Yeah.
When your trades gets to the level, not in a prop firm, but in a real account, where the single position is worth the salary that you are taking, for example, 10 years ago, so you are risking 2,000, 3,000, 4,000, 5,000 per position, and in 2 minutes, 3 minutes, you can lose it. Of course, at the end of the month, it's profitable, but on the short term, it's heavy on the mindset.
Yeah.
Specifically, if you go through the moment, and there will be moments where you take streak of stop loss. Like in the World Cup, I show transparently the trades I was taking. And one day I received a lot of insult from the people on Instagram because I've been transparent of one day taking 8 stop loss. Like small stop loss, like 5 tick, 10 ticks, but a lot of stop loss because it was a day that...
And you risk sometimes 0.2,
0.2, 0.3. So it's like my stop loss is 1.8%, 2%. It's not a big amount. You can deal with it. But when you talk to people and you say, look, I took 9 stop loss, you say, learn to trade. So they just think that a profitable trader is a trader that is having a huge amount of win rate. They don't consider that maybe the stop loss are incredibly smaller than gains.
Yeah.
So the stress part, and the third cons is the time commitment. Like to execute this model, you cannot do it as a hobby, you cannot do it as a side hustle. You need to be on the screen from the starting of the newer session to the end, because the position not only need to be executed, it's set and don't forget. It's set and check. It's something like this, because you need to trail your stop. You need to.
This is a model for real traders.
This is a model if you want that trading gets your full-time income.
Yeah.
Okay. Now on the London session, I manage companies with my business partner. But in the New York session, 3 or 4 hours I do this. And it's necessary, you cannot just get out. You can just decide that after a certain time you don't open trades so you can enjoy dinner. That's of course can be something good. On the pros, the first one is number of trades. Why this is good? Because drawdown gets covered really fast if you have a big profit factor and sharp ratio. So you can take 9 stop loss for the day, but by the end of the week I was again in profit. I was high watermark, so I was creating new high on the equity curve. And also a big number of trades creates something interesting for hedge fund that wants to give you capital, because a model that in 12 months does 2,400 execution is more respected than a long-term model that in 12 months have 30 trades.
Yeah.
Because the data sample wise, this model is more valuable.
Interesting.
It's giving you a lot of room of improvement, and it's giving you a lot of data analysis that you can input, and you understand really fast if your model is not working properly in certain market condition. Because, for example, I have a benchmark that is the maximum amount of stop loss I've taken, that is 11 stop loss. It's an humbling experience, but you know that the market can stay in compression for one full week. You know that every day it's a fake breakout for 1 week. I saw the last videos of Carmine Rosato. He was like taking a huge amount of stop loss, like for 3 weeks, but he's still in profit for the month.
Yes.
That's the good part about Scalper, the number of execution, and it's really easy to go back in profit. The second good part about trading with this model is that you don't need headache. Why you don't need headache? Because the prediction part is not there. You are just paid to read what the market is telling you.
Yeah.
So I don't need to start to say, considering the angle of gun, maybe the price will skyrocket to this price because this no, just this is the market state, this is the location, this is the aggression, this is my trades. And another good part, maybe this is the best part, I should have put this, that you cannot do revenge trading, because if you don't have the condition to trade, when you trade large amount of size, you just don't feel confident to execute. If there are not the condition of aggression, just it's not worth it to do it. So the third part is just there is no headache in deciding and no revenge trading in executing something that is not there.
Yeah.
You know, with price action, I don't know if you ever experienced it, but sometimes you see something that is not there just because you want to trade, so
Exactly.
you create the setup.
Well, you can have a bias, and then if, let's say, one time frame isn't giving you that bias, you can just filter through until you find one. Like our 10 time frames, let's say 8 of them are long, but you want to be sure, you'll just go to the one that says short.
Yeah. Yeah. This is something that I also did it. Like, our ego is bringing us to the condition that if we say in our mind that the bias for the day long and the news are long, we will just take every demand here because we think every demand that is getting break, it's a fake
And
out.
even down here.
Even
we'll say it's taking liquidity.
Till this wind doesn't get stake out, and of course this is a liquidation. So you also try the reverse, and then when you get destroyed,
That's normally the last resort, right?
last resort. Yes.
But another pro is that it's a high risk. It can be a high risk to reward.
It can huge risk to reward when it's not common. I need to be honest, but when Nasdaq is pushing, it's pushing heavy. And when you are in from the breakout of the level, and you are, because you need to consider that our target is the POC.
Yeah.
If you are here, there is no POC because you are creating value up.
True.
So you just decide to trail for the day.
True. Yeah.
Okay. Sometimes you get some 1 to 30, 1 to 40. It's not common, but it can happen.
But even high risk to reward at that 1 to 4, 1 to 5, that's a common reoccurrence.
1 to 2.5 is the minimum.
Yeah.
1 to 5 is common.
Yeah.
1 to 10, 20 is not common.
But
It only, when I do 1 to 10, 1 to 20, it means that you see on the Nasdaq 2%, 3% for the day.
Yeah.
So it means that I really follow the market properly. But I cannot do 1 to 10 if the market is doing 0.25 for the day.
Of course, yeah.
Like I'm in tune with it. Like I don't.
Plus, it's not that you're focused on risk to reward. It's just part of the model. You're focused on understanding what's going on and then reacting and following your model accordingly.
Yeah. When your model and when your primary focus gets to protection of capital and risk management, you increase the profit.
Definitely.
Like when you put your focus on something that you think it's not directly related, is when you make the most amount of profit.
Well, now let's go into the charts, I guess. The actual trading examples, yeah. So as we've established, this is truly a strategy and playbook for real traders. Traders who really want to not only trade, but understand the markets at a deep level. So now we're actually going to go over trade examples on the charts of those same playbooks. And what do we have in front of us here?
So this is a order flow platform, is a deep chart, and what we have here is volume profile, distribution profile of specific consolidation area. So what I was explaining to you before is that you can make it stupid simple, putting just daily profile. You can do this also from TradingView. Maybe the volume will not be as precise as this, or you can just do it identifying the most interesting compression area. As you can see here, they are clearly visible, where the market didn't transacted higher or lower, it just stayed in compression. I use every day this area, and what I wanted to show you before is exactly this. You see, here is the volume.
Yeah.
Okay? This is the volume. This is how much volume is transacted per price level. This blue line is the value area. So every time you see the model in consolidation, when it gets back, get back in, target.
Same on the
Up,
upside.
get back in, target. Up, get back in, target. Down, get back in, target. This one will be stop loss, but you have the second model. You have the execution model of this. In this consolidation, we need also to be honest that you don't identify it immediately. You can identify maybe it from here. You can take these two trades. This one is really uncommon because you start to see real compression. Yeah, it's too early. Exactly. Now, what is interesting is that you can frame also the delta. What is the delta? The major amount of volume getting transacted from one side on one price level, the aggression. And if you see here, look how much is big the delta. It's exactly at the level where they accumulate the last time and created this extreme breakout. Okay? This one here, I will also explain you later why the news catalyst is something where a lot of people think that the market is seeking liquidity, but at the moment, this movement is made because market maker go out of the market, so the volatility gets higher because you have less limit orders, and in this case, the market explode up to create a new level of balance. So in this case, we have reversion model, reversion model, reversion model, reversion model, and stop.
Yeah.
Here, probably. Aggressive model, here, breakout, and we will go deep dive in the lower time frame because now we are in 5 minutes, then we will drop down to 1 minute. This model can be used in every time frame. Like, to give to the audience a little bit of reference, you can either do 15 minutes, 3 minutes, you can do 1 hour, 5 minutes, or you can do the most aggressive one, that is what I do, 5 minutes, 1 minute. Okay? So 5 minutes is to watch the breakout candle. Okay, this one I don't go deep dive inside it because it's impossible to execute. You see, it went out of balance, no retracement, low volatility, low liquidity, so it's impossible to take. Then we will go to this one, that is day 23. It's this morning. Okay. This morning we will see exactly how the model play out perfectly on the trend following side. So I will show you how also the model behaves in London session, even if I only use this in New York session, the model really works as also reversion model in London and New York.
Yeah.
I want to show you the entity of the momentum to explain you why I do New York. This is New York. This is, you see how much is compressed. More retracement. This, when you take it, it just explodes.
Yeah.
And this is what I was trying to explain you before as the flow, getting in tune with the flow. So what we do now that our area are clear, we can go to 1 minute time frame. And we will start with the first one, okay? What we have here is the previous area. This is the value area high, this is the value area low, this is the POC, okay? So we are clearly out of balance from this movement. You can either be aggressive or just say I want to clear out also the high.
Yeah.
So I just want that there is no obstacles in my explosion higher. This is something that I usually do. I don't transact only when you break out. I wait because it can be the reversion model here. You know. Then what we do, this is the magic. the magic, we activate the orders that are getting filter for the amount of aggression.
Yeah.
Okay, so my filter usually is around 20 to 30. Okay, in this case, I think it's pretty visible, and this is the best example you can have. Look how much is balanced. Look what happens when momentum is building. So what I was saying to you, even before the breakout, if you know how this stuff works, can you understand that something is happening here? You are going from small orders, balance, to someone buying aggressively, and continuation aggressively.
Yeah.
Also, look at the amount of big orders that you have in bullish momentum and in bearish momentum. So you can clearly understand if you are following the flow or not. So the trades here is, like I was saying before, either the momentum continuation trades that you get framing the level with a huge presence of buy aggression, and this is another model that I also show on YouTube. That is just not, because this stuff happens in 1 minute. Okay? So every candle is 1 minute. You can either be fast and use only big orders, or just, as I was saying before, plot the profile from the beginning to the end of the impulse and say, look, let's zoom out in here. What we have a lack of volume here.
Yeah.
So there is a huge area that we can use as a low volume node. Okay. So when you have the retracement and you get close to the area, you can decide to take this as an aggression, or I will take this one as an aggression. Okay, maybe you enter here, you have the mitigation of the level, and then you have just continuation. Now, the more you wait to enter, the more it gets risky.
Yeah.
Because if you enter here, you are getting to a point where sellers can say, it's too expensive, the price. I went out of balance, but you want to be in fast and close fast.
Yes.
Okay? So from here, you can just identify from when the aggression is still bullish. I will start to be a little bit afraid here. I will start to say, look, the market is compressing again. The sellers are starting to fight back this huge momentum.
Yeah.
So maybe I can put my stop loss in profit.
Gotcha.
Below this low. Then what happens? That the market, again, you don't need to be a wizard. The market give you clues, because this breakout, you see, it's participated by huge buyers. The sellers try to get control back here, but what the market print a wick. So it means that they cannot control the movement, and I would completely take out the position where I see that, because big sellers, no follow up. Small sellers, big sellers, huge follow up. On this candle, you can go out. You can go out on stop loss in profit, or you can go out when you reach your risk to reward rates. Okay?
Because with this, as an example, just to highlight.
Yes.
So as you say, sellers, no follow through, but consolidation.
Yes.
We continue. We break out. We see the buyers.
Again, sellers on the low.
Yeah. Wick, but no follow through.
Exactly.
But could you say that these sellers are entering? They're maybe not getting stopped out. They're still in the market. So then when you finally see the sellers and then the follow through, now you know you use this build up of sellers previously included as well.
What I use is exactly what you see. What I use is volume spread analysis. That is the relationship between price and volume. So if I see, like you were saying here, sellers, okay, trying to push the market down, but they are punching a wall. They are not going through. So what they are doing, they can either stay still inside the position. If this movement stop them out, the market will accelerate. Of course. Okay. So what I see is that this aggression is the first one in all this movement that print this huge candle. Why staying in a movement that is saying we are getting the control? It's like getting inside a war and being by the side of the weak parties. Like, doesn't make sense. And from here you can see that participation is mainly by the sellers. I want to show you something. I want to clear a little bit and get back. Remember how the volume is inside this area. Okay? Let's remove for 1 second the big trades. Let's go here. You agree that this is a compression area?
Yes.
Okay, let's print it. You see that the market is not accepting below the value area. Because what happens is that here is transaction incorrectly, but every time they go deep discount, buyers enter aggressively and get back the position here. This is exactly what's happening. Let's go on the today price action. And so we saw one New York and we watched one London session. And this is not a normal London session. This is a London session. This is after the bombing of Iran. So the volatility is even higher than a usual London session because the market needs to rebalance this gap. Same situation, Ritz. So if I tell you, forget about everything it's here. Just tell me in which area there is the major amount of delta aggression from the buyers. In which area you can see?
Would it be the buyers, you said?
Yes,
Would it be
exactly this one. And if you see,
again, see, I'm typing in.
if you see, this is exactly how you can identify when it's an accumulation and when it's a distribution.
Yeah.
This is where all the traders are struggling, like Wyckoff, accumulation, distribution. But how can I identify objectively what's happening? If you see from this level, aggression of buyers, catalyst.
Yeah.
Let's go down to the 1 minute. And we are already in 1 minute, perfect. We activate the big trades. Again, same model. What we see? Buyers, aggressive, catalyst, 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 catalyst. Again, you see what sellers are doing. They are trying to push the market down, but what's happening? They're getting fucking annihilated by buyers. So, if you get the profile, as before, from the starting of the swing to the end of the swing, what you can see? You can see that volume is equally distributed here, and you start to have a low volume from here. So in this case, to follow the exact model, you will be unfilled in this position, okay? Let's go education-wise on and see what's happening and reading here. What you can do, considering that you are still in the same area, you see that from here to here they create a new dealing range, a new area. So you can do just the same from here to here, and you can go deep dive inside this location. Look where is the value area low, and look where is the low volume node. You see this lack of volume here?
Yes.
So you have the low volume node coinciding with the value area low, coinciding with this is free money.
Buyers.
This is fucking free money. You wait for this candle, you put the stop loss here, you target either, because even if you want to target, let's see here, okay? You are risking per contract $160. In the worst case scenario, if you want to be out really fast, you are risking 160 to make 500. Okay? So the risk to reward is more than 1 to 3 in this case. But this is the excursion the market gives you. So you see how the risk to reward can get really huge if you get in tune in the market.
Yes.
And the addition to the position can be done every time that the markets create a new high. This failed auction, it doesn't break out, but then it break out here. Okay?
Today.
Again, look, zero volume here. Like from the profile. Punching the wall, I will not get this trade because I don't have aggression, so it's not as safe as this one.
Yeah.
But again, the bias is completely fine. And this is the both of the model. We saw the reversion model and the trend following model, and the first time that I find out this myself was a haha moment.
Yes.
Because I just went to order flow and see, so I can see before it happens how the volume is developing, and also small exercise. When the market gets taken back in control by sellers, all this small volume, then huge aggression from sellers, but look also where the market reacts when it comes back. What is doing now? This is actual price action. We are not charting the past.
Yeah.
Sellers in control, where they will find the first problem when they get back to these aggressive buyers. Otherwise, they will continue to push the market down in this case. And when you see this case, it can be a punch on the wall because sellers try to push it down, but buyers protect the level. And if you see it closely, what is developing is
a trend following condition, because we are going, after all this balance, we are going out of balance. This is the first breakout,
Yeah.
and they can go back to the previous point of control. So they have a long room to go here. And you will notice, I don't know if it will happen live, that if this level get tapped back, it accelerates.
Yeah.
Because sellers are adding to their position. For now, it is out of balance print and it's going to rebalance to the POC, because it was not a successful breakout.
Yes.
That's the reason I say always trend following or reversal. Wait for the second drive. Don't take the first drive, because you can get tapping in a fake out.
Yeah.
That's it. It's not difficult. I know it's a lot of information for the audience for the first time, but
I think it's a lot cleaner than some of the order flow breakdowns I've seen before.
they just make it hard to not let people understand.
I mean, different platforms as well. Can make, like, so in this case with the what we would call the bubbles, for example, but in terms of execution with large orders.
Yes.
So have you filtered it so that it only shows specific size of orders?
Exactly, specific size. Because
And then you can take it on and off as well.
you want to filter out the noise. You want to see what actual big orders are doing. It's the same concept as commitment of traders for long term.
Yes, yeah.
You are just watching the participants that matter. If you move one contract in Mini, I'm not interested in it. You can do what the fuck you want, but if someone is adding 100 contract on Nasdaq on 1 minute, it's interesting. Like the momentum.
In terms of price getting to this point, this high that we were talking about here, because as we were talking about potential trades from down here,
Yes.
what is there anything to the left as to why price is reacting at this area? I think there's a high to the left that we were originally looking at.
You want to see where we are going.
Is there anything of significance in this area
Let's
that
watch.
would lead you?
We don't need to guess. Okay. So let's remove this part so we don't know exactly where it was. Let's print it. Let's go down here. Okay. Now let's clean all the noise. Let's go down here. Okay. As you can see, in all this area, the value area is this one. So I will make white the value area. So this is when the market, considering all the profile, the comprehensive profile also of the gap, is when it's getting expensive for market participants. Okay. But if we get deeper, we notice that the biggest peak of sellers, you see, this one. Okay. So this level can be something interesting from sellers perspective wise. The market reacted from this value area, is distributing, and as I was saying to you, probably is going back to the POC. That is this level, and it's exactly overlapping with the big volume trades.
Yes.
So the probability of a follow-up short now it's higher in this case, even if they get before back to the POC and then redistribute back down. But I want to show you also here from this profile. Was it understandable that this was the reaction level from the delta that is developing?
Yeah.
Yes, because this supply is the real way of plotting supply. You are just watching volume-wise when there is the most amount of executed trades, not limit but executed trades. This means that the auction get too much expensive.
Yeah.
They want to sell off in this case, and they sell off till here. Then what happened here exactly is that the price get too low to sell because it's getting cheap again to buy also for buyers. You know. So from this perspective, we have this buyers trying to aggressive, no follow up, sellers no follow up. So we are getting inside the decision range. The first one that will get breakout, you will see a catalyst in that direction, and probably the first level is this one.
Because even in this case, for example, if this was to break the high, even though we might not be looking to trade this, but if we were looking to make a prediction, would we then break the high and then look to go to the high of the value area potentially, or even the previous?
I will say the POC.
POC first.
Like distribute against the POC, and then if you need to refine an area where you can probably see a reaction, I will say this supply here, like you were saying,
not because it's the best level to react, because the best level to react is the value area high,
Yeah.
but because this delta here, it's really reliable on how much aggression is it giving.
Hey guys, so we've had
the aggressive setup, but we will only use the model that I explained before. We will not, because people can get confused with too much information. So let's go easy. But as you can see, they put aggressive sellers here, but the follow-up it's almost zero. Why? Because again, the buyers are protecting this position.
Yeah.
And in the overall bias, if you see what's happening at the moment, is that from the previous range of compression, the market tried to break out,
Yeah.
but it failed. So, structure-wise, we are still on. Now, let's remove all the unnecessary data and let's put the big trades.
The one thing you mentioned was that
The unnecessary data and let's put
delta volume custom.
So it's really important to see, to plot, this is something that I do often, to plot a profile from the first ball to the last ball, okay, like this, and check who is going out. The red ball is bigger, right? Yeah, but the result is really bigger, like with small volumes, buyers and get better results, you see here. So it's really important to see, to plot, this is something that I do often, to plot a profile from the first ball to the last ball, okay, like this, and check who is going out. put the big trades.
So one thing you mentioned was that those big trades,
Mm-hmm.
previously when we were looking at the charts, there wasn't that many because we weren't in session yet. The session had
Now
begun.
it's getting huge.
And you said like when we're in New York session, you're going to see it like so much, and we're not even in the session just yet, but you can already see an increase.
You know what I like about these tools and this platform, that volume is balls are proportional to volume. So when there is too much volume and not clear direction, your market gets flooded by balls. So it's not visible, the price, and you are forced to stay out because you cannot see what's happening behind. So it's like an insurance on your hand to stay calm, like to not do anything. And what I would really love, and my favorite setup possible, is when market explode, following up by a green level, and you can just jump in at the first level when it pulls back in a low volume node. This is amazing. Now this is totally normal, and this is the reason I strongly advise not to trade like 10 minutes before the session, 20 minutes before the session, because you will be liquidated, and then maybe your direction was right, but you will be fucked up by volatility. This is something that not all traders take into account. The volatility range can change by session, so a model that works for London session, it's not guaranteed that will continue to create alpha and generate revenue in the New York session. An example of this is the mean reversion model. You will see now, if we apply mean reversion model here, we will get destroyed by market. You will get also slippage because it's normal. It's compressing here. Still, the entity of the sellers is huge, but there is no follow-up. What does it mean? That someone is absorbing this order. And if they are absorbing this order, if you watch on the color, you say, it's controlled by sellers. But I still have my narrative long. Still think that we are going to get the high for the day. Momentum is building up. We are getting around 10 minutes, 13 minutes before the session. And as I told you,
So you would expect that high to take?
To target the design. Now, what can we expect when we target design? Explosion, like acceleration, like we were seeing before. Why? Because these huge orders are getting close. They don't want to be before session with this heavy and being in the wrong direction. So they try to anticipate the fall down of price, but as you can see, it's not going really good for them. So we're going to see when the market approach exactly this high. As of now, still not getting broken. What we want to see is these green balls here, like we did in all the previous situations. This is a good setup for follow-up. Aggressive setup, if we want to cover everything, one aggressive setup can be the anticipation on the first ball with stop loss below the sellers to get to the high. But it's a setup that you are still trading the noise. So something that you cannot expect will have the same win rate of a good frame trend following setup. So you see, when you get back inside the range, the balls are so big that you cannot even see what's happening. And this is keeping you away from interacting with the market, like transactioning.
In terms of like what parameters, if any, or settings have you put to identify these large orders? Is there specific?
Yes, for the 5 minutes and 1 minute for New York session, you can use 30 contract as a filter, 30 contract, and during London session you can go with 20. It's pretty accurate like this. And
so the larger it is, I mean, it's more than 30.
The more, maybe these are 100 contract, like so big. And I created like this proportional, so you don't need to click on it, see how much contract, but you immediately see that there is a big sell aggression there. Like it's. See, sell. I was expecting that the buy will, but sellers, so they are still keeping here. Why before session they are still keeping here? Because the direction is not clear. Who want to transaction here when you can get whip side high, whip side low? You are out of the market. You are getting liquidated with every direction. So,
and these buyers or sellers, they can be anyone, right? They could be, you know, a retail trader with a large capital, or it could be your funds or whatever it may be.
Exactly. Now, information that we cannot unsee is that at the eye they are still loading short, even if the market is going to push the eye. So the narrative is a little bit shifting, because if this low gets taken, we have this breakout, is interesting also the short till here. Why I will not take this position? Because the whole picture is long. So why should I take 1-to-1 risk to reward when I can wait and get a 1-to-3, 1-to-4, 1-to-5? This is the model we need to use, and the model is keeping you out of a lot of trades. Like, we need to be evidence-based and oriented on a large number of samples. Executing a 2,500 sample in a World Cup can give you the taste of what's worth to do and what's not worth to do. Because maybe 1 times out of 10 now we go short. But all the other times the seller are getting destroyed and the test is here, and you just lose to get a so small movement. That's
because I think that's one thing that's universal across any trading strategy, is that you focus on quality, rather than just anything that could work, or this has a chance of working, and it could work 1 out of 10 times, whatever it may be. Because I feel like that one time you do take and it does work, it always just reinforces you the next time to take it again, right? Take it again, and it might work 2-3 times. If you're lucky, then the next 20-30 times it's not going to work, but you're still thinking on those 2 or 3 times it does.
exactly.
Versus when you have an actual plan, quality trade playbooks, and you follow those playbooks, that's where your consistency will come from, your longevity will come from as a trader. That's where you're really going to start to scale your journey. And scale your journey doesn't mean that it's going to happen fast, but what it means is you will have progress. And the funny thing is, it will happen faster than the alternative.
Yes, the lowest road is the fastest road. It's always like this. Now what I'm doing in precession is marking up the biggest delta volume. So I want to know...
So delta volume's on the left, right?
Yes. I want to see at the market opening which level I can see that are getting tapped. I want to use different colors, so I will use just deep red for this one. And for the buy part, I take the swing for the low, and I see what's the level with most amount of volume. That clearly is this cluster of buy volume. To be honest, there is also this one is smaller, but it's still here. These are the level that we can see in 7 minutes getting visit, and from here we already know what to expect, when to expect it.
So do you sit on the 5-minute time frame when marking out your analysis? When it comes to execution wise, 1 minute.
Yes, it's clearly like this. Now chart is only showing us the levels. Color, we can see the aggression, and we can see the actual execution. So now we don't need 5 minutes anymore. We can just go down to 1 minute. Can zoom in. You see how much they are big when you go here. You can see clearly that this aggression at the moment is getting completely absorbed. This got absorbed.
Do you ever think, like, for example, in this case, this person tried to sell, got absorbed? Could that be the same person, like, sacking into a trade, or is that not sort of how
you cannot know if it's the same operator, but for sure you know that these traders are in drawdown, and there is still interest in the sellers. So what I can see is that they are trying to build a sell position, and they will be forced to close if market volatility spikes. So if I get these aggressive buyers and all these sellers need to close the position, we arrive here in market opening, and we are close because it's 324. This is the first moment I would expect.
And so in this case, if price did break above this level, you're not interested in trading that to the next level. You're interested once price gets to that level.
Exactly. Because I need to...
So would you say it's still important, to have this context? Even if you're not looking to trade to that next level, it's still important to understand what's going on.
Because you are training for the precession and creating a narrative. So when you know how to do it, you are still understanding with your subconscious mind what's happening, because you need to be really fast, and you need to reason fast. And if you don't do it and you do only for your setup, on 15 seconds and 1 minute is not enough fast to then execute at the right moment. You see how much volume and interaction is starting 5 minutes before, like I told you, not at 30, 5 minutes before they are preparing the order. From what we can see here, this is a huge information. Aggressive sellers still to this level, buyers with better results. All these are getting absorbed. This is not my narrative getting wasted. No, this is my narrative getting confirmed. So even more I should expect now that either from here or either from here we reaccumulate in the last 5 minutes and we shoot up. All these sellers are in pain. They need to close and the market create an expansion move up.
Okay.
It waits. I can take the long from there and I'm done for the session. Like one setup with high win rate, but understanding the narrative before makes you also understand market participants, how they are thinking, and if they are proven wrong with this amount of contract, you cannot hold anymore. Even if you have a $1 million account, you need to close sooner or later.
Are these market executions or
market execution, not limits? Like I never watch limits. Like you can get to feel a taste of the market, but
because the limits apparently they can
cancel.
Yeah, they cancel. So what do they call it? Spoofing, is it? Is that what?
Yeah, they call spoofing, like putting order to create market pressure, then removing. It's manipulating the perception of other market participants. But with execution, just these are executed market. There is someone that is with huge self.
You know that's in your mind.
You know it's there. If it close, you see it.
Yeah,
you see it. So in this case, so in the first minute of market opening, you will not see the chart.
it gets
balls. It will get like something like this.
Does this large aggressive buyer that failed up here, does that make you?
Yeah, you are getting good. You are getting. This is an aggressive buyers that created a failed auction. So the buyers here got like they tried really hard like this, but the sellers won here.
Yeah.
In this battle, also the sellers won.
Okay.
Because they are transactioning down.
Yeah.
So in this, that's the reason you wait for your confirmation and you don't jump here. Because even if the bias is long, you don't know if they will reach here or the second level that you tracked. I only know that I want to be in if this level gets broken.
Yeah.
So let's see what they do. 3 minutes before, a setup for a scalp position, a little bit more risky, is if these sellers don't have a follow-up and got absorbed by buyers. Shooting up here, but this is a risky position. But this can be, I show you, only to give to the audience a taste. This one, like risking $300 and getting 1,100 is not a stupid position. It's just a position that you are taking inside the noise.
Yeah.
I can take this kind of position only if I'm sitting in profit for the day.
Okay.
Like it's not uncommon that I take them, but I need to use profit and not use market account equity.
Yeah.
Because
using house money, right?
Yeah.
Yeah.
Like before I need to take money from the market, then I can take this kind of trades. The win rate is lower on this, but if you consider the risk to reward, it's like 1 to 4.
Yeah.
So it's pretty good. I just put this risk to reward because I want to let you understand that if these sellers fail, they will catalyze up.
Yeah.
I need the first minute. If this one gets broken, the setup is not valid. But if in market open at 3:30 you recover this level, and this one gets not broken, this is the target. So let's see how the market will behave. From what we are seeing at the moment, sellers won, sellers won, buyers won. Here. So you are getting a bias and a level that start to get interesting. Let's zoom in. It's not visible. So considering the platform, you should not interact in this position even before, because
you can't see.
You cannot see what's happening here. Because the first execution can be taken after market open, and we are still before. So one trigger can be the break of this eye, for example, for a long. So now that we are getting inside, if this eye gets broken, a really aggressive position can be entering at the break of this with the stop loss here, targeting the high. And I think it's even more than, as a risk to reward, even more than 1 to 4, it's 1 to 5 probably. So market is opening, they didn't break the high. So no position gets executed at the moment. Now we are in the second buy area.
Yeah.
So we need to check how the volume is behaving at the moment. Now, these traders are in profit.
Yes.
All these buyers that position themselves before the opening needs to close position. This will bring price.
So
All this movement is made by them. Now that we are in market opening, we can start to take position or do analysis that we can actually use. So let's see. The first information that we have is that sellers still won this battle at the moment, and they are getting stopped only here. Okay? So, still in the noise, remember our rules. Till we don't get here, the premium setup is not executed.
yes.
So, inside here, what can be something interesting for us? The first information that we can have is sellers really aggressive here that don't have a follow-up short.
Yeah.
So if this candle start to get populated by a lot of sellers, but get back here,
Yeah.
this can be a long. But again, it's a long that you take inside market ranging. So let's just wait here.
Because you have a level beneath this, right, and towards the low.
I think the main level of the buyers are getting destroyed.
Yeah.
So the only reason I can engage in a risky position here is if this one prove me that it's a fake out. How can they prove me that it's a fake out? They need to recover all this.
Yeah.
This one needs to be a full week and they need to break up again from this high. If they don't do this, you see, sellers are completely dominating the market. So, not engaging here. You know, in price action, you can try this long because you don't see this. So you think,
Yeah.
hey, it's retracing. I can buy discount. No,
You're thinking like break and retest the level.
You know, this is something that if you are a price action trader, you cannot know, not because you are not good, but because you don't see that they are willing to sell stronger at lower point.
Yeah.
So the auction is getting short. Which one is the first level we can protect? We need to go with the profile on everything they build also during London session, not only during the range. This big area and this low volume node, like also Carmine is doing. This is a low volume node and this is the delta.
Yeah.
This is the last protection level. If this one is breaking, they are recovering this cell and they are collapsing. And this exactly.
And in that scenario, what would you do? Would you just then wait?
In the scenario that they get sell, my narrative will change because they break a balance level, not on the up, on the downside.
Okay.
So my day is short.
Yeah.
If my day is short, I will still use the same model. Just I will not get long, I will get short.
Gotcha.
Like my long day gets activated if we break this.
Yeah.
My short day at the same time gets activated if we break the compression range, that is all this range. If they arrive here, we can try something. But here, there is something that is undeniable. They are on this level, they are pushing hard, but I don't see a lot of follow-up short.
Yeah.
So here the buyers, you see how many volumes.
So much. Yeah.
Here the buyers are protecting it, limit orders. So either they slice through it, but if they start to recover and they get back inside the range, this is a setup that also Patrick Neal is using with volume.
Mm-hmm.
And you see the good part about volume is keeping you up.
Mm-hmm.
It's keeping you out of the market when it's not ready. Here. Because let's go again to the narrative. Here, if it breaks the low,
Yeah.
we get long. It continue down. Okay. Here, if it breaks the high, we can go here. Why? Because if the volume don't does this means that the sellers are controlling all this market movement.
Yeah.
You don't need to predict. You just need to see what's happening. Here is the first time for the market opening where buyers are protecting a level.
Yeah.
In an interesting situation. So this one can be the first long position if it gets confirmed by a little bit of buy aggression. At the moment, it's only sell.
Yeah.
The moment it's only sell. So now the only thing to do is wait what they can do. Now one position that gets really interesting is the squeeze of the trapped sellers. When is the squeeze of the trapped sellers? When you recover all the aggressive sellers, they are getting fake out, so they are willing to close the position, and the market is accelerating high. Let's see what is happening here. This is the first footprint of long position from the level that we saw. Still, someone can think, why you don't take a long position here? Because at the moment, if you see who created the swing, like we were talking before, it's completely dominated by sellers. This is a really risky position. If we start to get back here, we can take a position on the breakout with stop loss below the level. But remember, the model is one. You need to break and test this level, otherwise you just stay out. When this level gets broken, the game starts. You can add the position, you can follow up,